investing in property makes sense. Investing in the right property takes knowledge. Welcome to the Rewarding Property Decisions podcast. I'm Jared McCabe, Director of Wakeland Property Advisory. Join me for expert insights into the fundamentals, trends and opportunities to help you create long-term wealth through smart property decisions. Hi everyone, and thank you for joining me for episode 79 of the Rewarding Property Decisions podcast. So we're back at a question and opinion podcast today. We've had plenty of questions come in, so I thank everyone who's wanting to ask a few things and get some answers. So thank you very much for sending them all in. We'll do our best to get through as many as possible, but there has been a few, so I may not get to all of them. But let's get straight into it. The first questions come from Carol in North Adelaide. She says, my husband and I are considering buying our first investment property and are wondering what types of property in Melbourne make the best investments. Now, I guess here, Carol, what I would say to you is it really depends on what your objectives are. When looking at buying an investment property, people look at it and can come at it from probably two different angles. Some people are focused on capital growth. Others will be more focused on the rental yield. Now, some will try and tell you that they can do both, but typically what we've found is that capital growth and rental yield work at cross purposes. So high-yielding properties tend to be higher-risky properties, and they also tend to have more value in the improvements. High-growth assets tend to have more value in the land component. So, and which probably brings me to my point around determining what types of properties work best in Melbourne. What we've found over the years is that there's typically three key elements that you need to really focus on. And listeners to the podcast will have heard me talk about this on a regular basis. But those three elements are you need to have a really strong underlying land value. So being in an area where demand is very strong for land and land is not readily available in that it's in short supply. So if you've got a strong underlying land value, that's a really good starting point. The second is having a scarce property. So there's a couple of elements that contribute to scarce property. It's the underlying land value. It's having a property that's not being replicated and having more and more of the same thing being built. So that's a really important component as well. And the third is to have a property that has multifaceted demand. So it's not reliant on just one buyer profile. So if you've got the right type of property, it's going to have potentially first home buyers showing interest in it. It might have upsizes, so people coming from a smaller property. It might have downsizes, and it could very well have investors as well. So if you've got the right type of property, having more than one demand profile showing interest in that property means that if one drops off, then the others still continue to have demand for that property, and it continues to push its value profile along as well. So over the years, what we've typically found is the best option from a growth perspective in an investment property in Melbourne are the single-fronted cottages and terraces, which you typically find within about a 2 to 10k radius of Melbourne CBD, whether they're Victorian terrace houses, perhaps even one of a pair 1930s duplexes, Edwardian cottages, both brick and weatherboard, depending upon the suburb that you're in, work really well. But we tend to find that, as I said before, they've got all those three elements. They've got the strong land value, they've got the scarcity value because they're not being replicated anymore. But they're also very good from a multifaceted demand perspective because first home buyers like them, upsizers from apartments like them, downsizers from family homes like them, and investors love them as well because they're very popular from a tenancy perspective. So they hit all three targets, which is really good. Okay, the next question says, it's from Megan. Hi, Jared. I'm a new listener to your podcast, and I've heard you speak about scarcity value. What do you mean? I guess that leads on from what we've just said, Megan, in the previous question. But just to go over it, property is like any other commodity. There is more, if you've got something that's got more demand for it than there is supply, typically, obviously, with the old economic adage, you're going to get increases in values from that point of view. So from a property perspective, to get scarcity to it, there's two key elements that really create that. The first is that strong land value and the location, so being in a really good location where demand is at a premium for this type of property. And then the second component, which is really important, is the architectural scarcity. So what we've found is period style property that's not being replicated, as I said earlier, is really important in that space. And if it's no longer being constructed, it's got limited supply. And if the strong demand is there, then that's where you get that upward pressure. So both of those elements create scarcity value to a property. And if you can harness that, then it starts the process of getting some good capital growth. Okay, the next question comes from Gary, who's down at Inverloch. Hi, Jared. I watched a YouTube info session, and the presenter on there spoke about buying property with a rental guarantee. How do these work? Well, this is an interesting one, Gary. It's not something that we've ever really focused on. In fact, I've typically found over the years that it's probably a red flag from a property perspective. But typically what rental guarantees are, and they usually come from a developer. So it's normally a developer who's selling property off the plan. They'll typically... The rental guarantee will usually last for a 2 to 3 year period, and in most instances it will be in excess of what market rental figures would be for that type of property. So what you'll find is that the tenant will probably pay a market rent, so what the market rent would be, and the shortfall of the rental guarantee will be subsidised by the developer to make sure that there's that increased yield. And developers typically do that because they're charging a premium for the property, but they're wanting to make it look attractive by increasing the rent. So by having a higher rental return, the higher price can be justified, and the rental gap that they're going to contribute to is usually far less than what the premium is that they're charging on top of the property. So it works out favourably in that regard. And then the poor investor, once the 2 to 3 year period of the rental guarantee comes to a conclusion, usually what happens is the tenant either expects the rent to be reduced to market levels, or they'll move on and find something else that they can look at. And then the investor is stuck with trying to find a new tenant, and if they start chasing that high rental again, most likely that there'll be an extended vacancy period. Or they'll have to take a hit and start to realise that the price they paid wasn't necessarily reflective of market value. So, yeah, rental guarantees are something to be very, very cautious of, and make sure that you understand the risks associated with buying a property under those circumstances. Okay, the next question we've got here is from Ruby, and Ruby says, my parents keep going on and on about making sure the property I buy has a north-facing orientation. Does this really matter? Well, the logic behind what your parents are saying, Ruby, is absolutely correct. But it probably needs to be dug a little bit deeper rather than just having a blanket north-facing orientation. Because it's not necessarily with property a one-size-fits-all type strategy. North-facing properties can be fantastic and have really good natural light, really good direct sunlight. But there's properties that can face south or face east and west that have other attributes that perhaps in certain areas north-facing will not have. So I use the example regularly of Northcote as a fantastic in a suburb in the inner northern areas of Melbourne. It's very, very popular. It's got some great property there. And if you're fortunate enough to own a property, perhaps an apartment up on top of Ruckers Hill, then you could have a property that faces north and brings in a hell of a lot of nice sunlight and looks out over the suburban area, or you could have a property on the south side of that property, of that development, that faces the CBD and has fantastic CBD views. So it's not to say that the north side is wrong, but it shows that there's other types of property that could be just as in demand for certain types of buyers. The other example to use, because a lot of north-facing, particularly with houses, people are looking for north-facing rear because you can have a large amount of frontage and bring in good natural light at the rear of the property, quite often where the living space is. But people quite often make the same judgments on single-fronted cottages and terraces, and they're looking for the rear of those houses to be north-facing too, which is fine. But the large part of the frontage, or the large part of the orientation with a terrace house, is actually going to be along the side. So if you've got an east-west facing terrace house with the south boundary being the party wall, then you could have some fantastic natural direct light coming in along your bedroom windows rather than just at the rear, the small 5 metre frontage that you've got at the rear of the property. So it's understanding what your property is and where you're going to get the most benefit as to determine what is going to be the best orientation for you. So I guess, Ruby, it is the direct sunlight, which is the philosophy around north-facing orientation, is absolutely correct. But it's not the be-all and end-all, and it's not a one-size-fits-all strategy. And it's not that north-facing isn't always good. Generally, it is for Southern Hemisphere properties. But south-facing, east-facing, west-facing have certainly got their merits and shouldn't be ruled out purely on the basis that they don't face north. Okay, the next question comes from Zhao in Sydney. What renovations could reduce the value of property? And because she's looking from a perspective of our property is in fairly basic condition, but I don't want to do the wrong thing in terms of upgrading it. which is a really good thing. And I mean, it's something that a lot of people need to be very mindful of at the moment, obviously with the amount of cost associated with carrying out any building works at present, and the difficulties in obtaining builders to actually carry them out in the first place is quite difficult. So no one wants to spend all that money and then find out they've spent it in the wrong areas or actually overcapitalise their property. And that's typically the biggest issue that people will have, particularly with investment properties. In terms of spending money, is it's not that you won't necessarily improve the value in some way. It's a matter of whether you're going to maximise the return on your investment into your property and appreciate the value as much as possible, as opposed to spending money in areas where you're really not going to get return on investment. There can be circumstances where it can actually start to detract. I've seen certainly with some apartments. A good example a few years ago was where some clients had a property that we looked at buying and then rejected during our inspection process. It was a 2-bedroom apartment, and it had been converted. Initially, it was a 2-bedroom apartment. It had been had a nice, good-sized lounge area, separate kitchen, 2 bedrooms, bathroom, and a balcony. And what the previous owner had done was take the kitchen out of the kitchen room and put a little bar kitchen that you see quite often in some of the modern apartments along one wall in the lounge, and convert that original kitchen to a 3rd bedroom. Now, in theory, that probably helped from a rental return perspective. You can put an extra body in there, and that works quite well from a yield point of view. But from a growth perspective, people came in there and started looking at it and saying, well, it's now become very unbalanced. We don't have a very big living room, and we've got an extra room for accommodating another body in this apartment. So you've gone to a 3-bedroom apartment from a 2-bedroom, but you've actually made the living space smaller because you've taken the kitchen away. So it actually detracted from the property's value and reduced it. So there are things that you can do that can compromise, which is not a good thing. So it's important to understand who you're trying to pitch your property to and what your end objective is when you come to doing renovations to a property in that regard. The next question comes from Barry down at... he's at Ocean Grove. Barry asks, should I sell via auction or via private sale? And that's a really good question, Barry. And it depends on the type of property you've got, but also the location of that property. And what we've found over the years is auctions work best when demand outstrips supply. If you've got a property where there's going to be more buyers than there are properties available, then the auction process typically works really well in that environment. It'll create extra competition. The fear of missing out kicks in from a buyer's perspective, and they'll compete hard and hopefully push the value up of your property so that you can get a great result. On the flip side, from a private sale perspective, we tend to find that it's where there's more properties available than there are buyers. And if you're going to have an auction in those circumstances, it can be a very lonely process, because you won't find that there'll be too many people turning up. And then it puts the buyer in a pretty strong negotiating position because they can see that they don't have a lot of competition. So private sales typically work best in that. And most properties in Australia do sell via private sale. It's just that in the capital cities, particularly Melbourne, and in the inner city areas where demand does outstrip supply, the auction process works really, really well. But if you go out into regional areas around Victoria, the majority will sell via private sale. But there are some, if the property's got some form of point of difference and the demand is likely to be there, where the auction process will come in and can work well. But yeah, that's typically what we find. Next one here comes from John up at Mildura. He says, I've got a friend at work who told me not to bid on a property until it's declared on the market. So what do you suggest? Now, there's a mindset thing there, and there's a theory behind that about not bidding until a property's on the market. But again, it's not. You can never have a one-size-fits-all strategy. We go to a lot of auctions, as you'd understand. And if I went to every auction every Saturday and said, right, I'm not bidding until the property's on the market, there'd be a lot of times where we wouldn't get an opportunity to buy a property, or I would be in a much weaker position to negotiate because it would be open to everyone. So it's understanding what's going on. And as I said, every auction's different. So you can't go with that one-size-fits-all strategy. Some circumstances you may need to open the bidding and then perhaps even drop out and come back in at a later date. Sometimes you'll bid from the start and bid right through to the end. Sometimes you do come in right at the end if others are ready to fight it out and get it to a point where it's declared on the market, and then you run the risk of missing out if you don't bid. So there's no one-size-fits-all strategy with that, John. I think you need to to really going to auctions is, I think, people watching is really important, and reading body language to get an understanding as to who you're competing against, and what the other buyers potentially are going to be doing. And another example is we tend to find that first home buyers over the years are notorious for not wanting to bid. They're quite nervous, as you'd understand, and so they may want to hold back and see others. So you may need to open the bidding in order to encourage others to jump in to see where things are going to end up. So yeah, not a one-size-fits-all, but it's certainly an option that you can consider. Next one comes from Anthony in Blackburn. He says, my partner and I are considering a villa unit as an investment, but have noticed there are huge variations in price for properties that seem very similar. Why is this the case? It's a really good one, Anthony. And villa units can make fantastic investment properties, so it's a good property to be considering. And there are a number of factors with villa units that can determine value, as with most properties, but some of them can be not easy to recognise or understand if you don't not really know how the market works for that type of property. Location's obviously a big one. It's big for any property when you're considering value. But what we tend to find with villa units is they are, a lot of them are located in the middle ring suburbs of Melbourne, so sort of anywhere between 10 and 20 kilometres away from the CBD. And as we'll all know, with the public transport system in Melbourne, it does fan out. So there can be black spots around the city where public transport's not readily available. And so we find with a lot of villa units, they can be quite isolated and they can be a little way from the local village and things as well. And that can have a big influence on the level of interest. Home buyers probably are less concerned about that. Whereas if you want to have that multifaceted demand, investors will want to be close to those services. So you tend to find that there's greater demand and greater values for properties in the right location with villas. But the big one, I think, with villa units, which can go unnoticed, is the form of title. So whether it's a strata unit or a stratum unit, or whether it's a company share unit. And interestingly, in the last Q&A or Q&O session we did on the podcast, that was one of the questions that we spoke about, is the different forms of title. So probably worth going back and having a listen to that. But they can have a very much a direct impact on value. Strata is favourable, stratum less so, and company share less so again. So the form of title can have a big influence on the value of a villa unit, because if it's stratum or company share, some particularly first home buyers may not be able to borrow the funds that they would want to against that property and therefore won't pursue it. So that can have a real impact on value of property. The number of units in the development's always a big one. And the other one too, which partially comes under the form of title, but not always, is that the courtyard, which is such an important component of a villa unit, that having that outdoor space is what attracts a lot of buyers to that type of property. They can quite regularly not be either on title or under a lease or license agreement. So they can just be common property. They're fenced in, so you've got exclusive use. However, if push came to shove, you don't actually have any actual rights to that property. So that's really important. That's a really important question to ask when you're looking at villa units is the courtyard on title? So, or do I have exclusive use in terms of some form of lease or license agreement as well? So I think that's a really big one to consider, Anthony, when you're looking at that. Next question. I keep hearing, this is from Michael up in Dubbo, I keep hearing how well markets in Brisbane, Perth and Adelaide are doing, and should I be investing there, or is Melbourne a better option? And this is a really good question. It's something that we obviously focus on Melbourne, but we keep an eye on other cities to understand what the markets are doing there and how Melbourne compares. And certainly those three cities that you listed, Michael, are doing very, very well. Perth and Adelaide in particular have experienced significant periods of growth over the last 4 to 5 years. And it's very strong. Now, if you look at the Perth market, we all know that it is heavily reliant on the mining sector and commodities prices. And it's having enormous spikes at the moment and doing very, very well. Whereas historically, Adelaide's probably been a little bit more slow and steady, whereas in more recent times, it's had some substantial growth as well. So I guess then the question becomes, well, how sustainable is it going to be in these two cities? And I think Adelaide's probably got a more consistent potential, whereas Perth is still likely to be more up and down. So it's going through a significant growth at the moment, but it also had a long period of time there where it really did not do a lot at all. And then there's the other one, which you mentioned, was Brisbane. And I think that's probably where there's far more likely to be consistent and long-term growth. There's been some significant investment in a number of different infrastructure projects in and around Brisbane, which is certainly helping that. And then we've obviously got the Brisbane Olympics on the horizon as well, and that will certainly put the spotlight on Brisbane as a city and probably make it more of a global city than it's been in the past, whereas Melbourne and Sydney are probably seen as the two global cities in Australia. But I think this will certainly help Brisbane, and these other infrastructure projects were already in place prior to the Olympics. I think that's going to contribute to it as well. So I think longer term, I think Brisbane's probably got the greater consistency in terms of growth going forward. But that doesn't take away from Melbourne. I think Melbourne's got a huge amount of growth potential for a number of reasons. Obviously, it's a fantastic city, global city, fantastic economy. So I think there's a lot of potential there, but the confidence has definitely been shot, and there's been a lot of with the pandemic. There's a lot of negativity around property in Victoria at the moment. Seen from a tenant's perspective with the way rental prices have gone, the way interest rates have gone, the way land tax has been ramped up, the extra expectations on investors to improve the quality of property for tenants. So there's a lot of negativity and a lot of cost associated with property in Victoria at the moment, which is making it hard to see where and when it's going to grow again. And I don't think there'll be a huge amount of growth in the short term. I think it's likely to continue the plateau that we've been seeing for the past 2 or 3 years. But as we've said, and I know Richard Wakeland said this a lot, the longer a market's held back, the harder it'll go when it does. And we saw that in Victoria, Melbourne, particularly in the early 90s to around 1997 when it kicked. There was a sort of 6 to 7 year period there where not a lot happened. And then when it went really well and really hard. So I think Melbourne as a whole, medium to long term, is going to be really, really strong. But I think the short term is likely to be pretty stagnant for a period of time. But I do think that there's great scope for some good performance in Victoria and in Melbourne more specifically. All right, that's about it for today's episode. Thanks very much to everyone who did send those questions in. I really appreciate it. Love answering questions and interacting with the listeners, which is always a good thing. So that's episode 79 of the Rewarding Property Decisions in the book. As always, please feel free to share the podcast far and wide, friends, family, colleagues, and anyone else who has an interest in property. And if you'd like further information on how to make rewarding property decisions, please visit our website, wakeland.com.au, and we wish you all the best with your property decisions.